Good morning and welcome to INFINOX Market Insights with me, Richard Perry, analysing markets for INFINOX on Wednesday, the 18th of August. Now, into today's session, there's a sense of early consolidation that is playing out through Forex majors and equity markets. It seems as though that the sharp moves that we saw yesterday are just settling down slightly. The dollar strengthened on a safe haven bid yesterday, and that affected across Forex majors, and also we saw equity markets pulling back. Sense of consolidation today seems that markets are settling a little bit, but it'll be interesting to see focus on the likes of sterling after the UK inflation missed estimates, and also the Kiwi dollar. The New Zealand dollar lost ground yesterday on the back of the expectation that the RBNZ was not going to hike interest rates as expected, and in fact they didn't. So how is the Reserve Bank of New Zealand impacting on the Kiwi dollar? Well, it certainly seems that the downside pressure is still there, but will it make a key breakdown is the question. So with regards to where markets are looking forward to today, well, we've got the Canadian CPI, which is likely to impact on the Canadian dollar later, but also the Fed FOMC meeting minutes as well later on this evening as well. So that will be looking out for, again, hints towards the taper, but obviously we've had some Fed speakers recently which are coming out increasingly hawkishly, but certainly the focus will be on those Fed minutes. Now, with regards to the charts we're looking out for today, we're focusing on cable with that UK inflation data, big downside move yesterday. Cable's just settling a little bit, but it'll be interesting to see whether sterling dollar can recover. Also the Kiwi dollar as well on the back of that RBNZ decision. And finally on the oil price as well, testing a key trend support. So let's have a look at these charts. And on the INFINOX MT5 platform now, we can see with cable that the negative drift that we've seen in the last couple of weeks has really taken hold once more with that significant downside candle that we saw yesterday. And the downtrend that we've had in place for cable is now solid and firm, and the resistance overhead at 38.90, which was tested throughout last week and early this week, and that has now been decisively rejected, and the market falling below 38 big figure, which brings it into this sort of band of support, and it really did test that level of support around that 37.30 level yesterday, just picking up slightly today. Surprisingly, I think on the back of this inflation data, you've seen, this is the hourly chart, you've seen cable slightly higher. I'm not sure whether that's going to continue, but for now we can see that there's slight pickup, but from the 4-hour chart, that's slightly from oversold positioning on the RSI, but it certainly suggests that we're in this negative phase for cable, and selling into strength is likely to be the case now. A reaction around the 38 big figure area, that old support, is now a basis of resistance, and I think it's selling into strength really on cable until you get back above this 38.90 level. I think you're now suggesting that we're pressurizing to the downside. Initial support around that 37.20 mark, but again 35.70 could be on the cards. And on to the Kiwi dollar after that move yesterday by or the fact that they found COVID back in Auckland yesterday, that suggested that the RBNZ would hold off from rate hikes. They did that, but they are still suggesting another rate. There will be a rate hike this year and another 4 potentially next year. So the market is just held up initially, but it's interesting that if I just zoom out, you can see this band of support. It's actually in now, and again, every time it gets into this support band, it has one closing level in and then reacts back out again. So that will be something to look out for. Will the Kiwi react back out above this support again? 69.45, 69.50 area will be watched, I think, for now. If it doesn't, then the pressure does grow to the downside, and this sort of failure of the RSI becomes an issue. Looking on the 4-hour chart, you can see that resistance overhead around 69.50. So a failure to get back above that would really put the pressure on for a downside move. But for now, the market is holding up, and it's still obviously a little bit uncertain with that candle that it's got today, but the closing level today could be crucial here. And finally, on the oil price, well, it's come back again to test this uptrend channel support, and you can see the importance of this channel. It has been moving higher since March earlier this year, and it's certainly in this channel, but testing that channel, and you've got the negative configuration of the momentum. I'll it's got the trend here on the RSI certainly is lower on trending lower on momentum, so it would suggest lower highs, lower lows, testing of that trend support. Now, does that break down? Well, initially we've seen some moves around this level which have found support, and you can see that the support is coming in around that 67.75, 68.75 area. So testing of those supports are now ongoing, and whether the market closes lower, but again the fear would be another lower high and then pressurizing on the support. Thank you for watching this video. I hope it gave you some good insights for your trading. Join me again on Friday, where we'll be looking at where markets are positioned at the end of another trading week. So I'll leave you with the INFINOX support and resistance table, and I'll speak to you then. Thank you very much.